Last week saw a near failure of one of the most important mechanisms in our debt-fueled Ponzi, the Treasury auction. With over 33 trillion in treasuries, they are by far the biggest Jenga in the tower. If they fail, it could topple the whole thing. So first, what is a Treasury auction? Janet Yellen and her junior clowns run auctions to sell federal debt. These typically happen several times a week. Yes, we are borrowing that much, and some to over 10 trillion per year. The main participants in auctions are financial institutions, and they bid what interest rate they'll accept to buy new federal debt. So with that, what happened? Last Thursday, Treasury tried to borrow $24 billion, selling a bunch of 30-year debt. That's about a third bigger than these auctions were last year. The problem is to get enough people to buy all of that debt, Treasury had to jack up the interest rate, and even then the so-called primary dealers, the resellers, were stuck with a quarter of the issue. So the market basically didn't want a quarter of the federal debt. Why? A big reason was foreign buyers pulling out. In a single month, they've gone from 2/3 of buyers to just 60%. A year ago, they were 3/4. Meanwhile, the bid to cover plunged to 2.24, which is right on the edge. Worse, there was a huge tail on the auction, meaning the gap between the rate participants expected and what was actually sold. It's normally 2 to 3 basis points, that's 2 to 0.03%, but on this auction it was a towering 5.3. That's the worst since 2011, which was the eve of the S&P's downgrade of federal debt. At the time, it was a first, and it is concerning to see that kind of jump out of the matrix for no reason. As James Lavish put it, the auction was, quote, breathtakingly bad, just short of catastrophic. Indeed, within hours, the auction itself spiked 30 years by 0.2%, so that's equivalent to a Fed rate hike. That is a massive move given it's coming out of the market. It's equivalent to a rise of 4.3% in the cost of capital for what is literally the global reserve asset. As James noted, 4.3 is what you expect from a meme stock, not from treasuries. So what's next? Brought to you by Unchained. What's next is this near failure is going to spook the Fed, who is already effectively selling treasuries even as Japan, China, and Saudi Arabia are all selling into the same abyss. If this auction means private buyers are nearing their limit, then the coming tsunami of treasury sales are going to break it. That would make interest rates soar on that 33 trillion of federal debt. The only way out would be the Fed's money printers, QE, also known as inflation. As Herbert Stein put it, anything that can't go on forever will stop. Whether it's a failed auction or something else, our unsustainable Ponzi is on borrowed time. Okay, we'll be watching. See you next time.